It's been a steady Q4 for L&T Tech. The quarter grew sequentially, boosted by seasonality in SWC or Smart World and Communication business. My colleague Neeraj Shah spoke to Amit Chadda, MD and CEO at L&T Technologies, decoding their Q4 earnings. Listen in.
So if I look at the quarter gone by, 5.1% constant currency growth quarter on quarter sequentially, amongst the best we've had in the last few quarters, number one. Number two, 17.9% growth in constant currency, getting us to a $1.2 billion run rate, where we were $1 billion less than 12 months ago. So I do believe, all in all, I think the team has done amazingly well this year, given the climate that it was. Multiple $10 million plus deals. In fact, if I was to reel off, we've been able to close a $100 million deal this particular year. We've been able to also get in multiple $20 million, $30 million deals, and $10 million deals. So all in all, pipeline stronger than last year, and stronger than last quarter. So we do believe that as we move forward, we will see traction continuing to improve. Again, knock on wood, and we are of course being cautiously optimistic.
Any formal guidance that you're laying out? Excuse me, I don't have a handle on that. Maybe you put it out with the release, but any formal guidance that you're laying out for FY25, part one, and part two, at a point of time when a lot of the peer set, be it IT services, which is not exactly your peer set, but I'm just, humor me, IT services or otherwise, are talking about uncertainty in NA and couple of other parts. How confident are you of business prospects?
Sure. So we've guided 8 to 10% constant currency organic growth for FY25. We've also reaffirmed our aspiration of getting to $1.5 billion run rate in FY25. So we've done both of those. So there is an inorganic element that should kick in sometime this year. Having said that, if I look at the three segments, so we've restructured the company into mobility, sustainability, and high tech. And if I was to look at the three segments, I believe that transportation or mobility will continue to spend in software-defined vehicles and vehicle engineering. We do believe that sustainability, there will be a lot more happening in plant engineering, and we continue to hire and actively hire in that space. And then in the high-tech space, I'm fairly comfortable that the hyperscaler spend is coming back, as well as driven by AI and software-defined everything. There is an embedded systems, there is a growth coming in from a semiconductor sector again. So those are the positives, if I may, for FY25. Looking ahead, industrial products and parts of telecom or operators seems to be a little sluggish as we look at the future. But that's from an engineering standpoint as we see it. But all in all, year to play out, it just started right now. As you said very rightly, uncertainty, so we're baking it all in as we are providing the guidance at this stage.
Interesting. I heard you say semiconductor and the positive side, because there was, I believe, some bit of spending freeze that most companies, including you, were seeing. That's changing, you're saying.
So there's a spend in Semcon for AI chips. And if you remember, I had committed to you that we'll get people trained in this area.
Yes.
Happy to share, we've got more than 3,500 people trained in AI right now. We've got a differentiated strategy of hardware, embedded software, and then application software and data as 4 layers for AI, not just application data. And that, I believe, is helping us as we go to the market in terms of winning new deals and gaining market share. See, it's all about gaining market share at this stage, because some of the spends may have stagnated, so you will have to find newer pools and newer areas and stay differentiated, if I may, to be able to provide value to the customer. And that's what has been our endeavor over the last few quarters and months. And I believe as we go forward, we will continue to play that out and be able to build on our pipeline as well as closures.
Interesting. So, Amit, would it be fair to say that given a choice, because it's an uncertain global environment, if you get business, you might maybe compromise a little bit, not compromise, but maybe give a little bit on the margins as well in order to get that business in? A lot of your peer set is talking about that. I'm just trying to understand how you're thinking about it.
See, more than giving up margins to win deals, I would rather invest in advance in soft assets, in labs, in infrastructure that can help my client get to work faster, rather than providing rate discounts and winning at lower margins, etc. So our strategy is slightly different in the ER&D world. So rather than trying to buy deals at much cheaper prices, etc., I'd rather create a differentiated strategy that allows me to be able to be a value player. So we'll continue to do that. So you will see some investments that we will make additional to what we've been doing normally. So normally we spend between 1 to 2%. Our investments will go up slightly in the near immediate term because we've restructured now mobility, sustainability, and high tech, and we are making those investments. There's a new lab that's been set up for EV value engineering in Bangalore. There is further investments being made in Dallas, investments being made in Mysore for software-defined everything, digital manufacturing solutions in Chennai. So you will continue to see some of this happening as we go forward, because we want to be able to future-proof our business for tomorrow and be able to grow faster than industry. That's the goal.
Okay, so in some sense, in the Q3 call, you mentioning that the winter is over and spring is around the corner, it seems to be kind of turning out to be true, Amit?
So 5.1% clearly had spring is here. Yeah. You would agree with me?
Yeah, I would agree with you. Okay.
Now we have to see whether it gets to summer or stays as spring. We'll see.
That's true. Visibility on the cybersecurity deal, Amit? I mean, just kind of bring that up.
Cybersecurity, one of it's a great deal, $100 million or 800 crores. You know, it's very important. Number one, I'd like to thank the government of Maharashtra for having confidence in us and their far-sightedness to be able to think that cybersecurity is extremely critical. This is building forensic audit, forensic trail, forensic investigation infrastructure for the state of Maharashtra, and this will be up and live in about 6 to 9 months from now. We are leveraging our partnerships with Palo Alto, IBM, Cisco, and others to bring it forward. It's a world-class solution that we've architected. Work has already started with the team. I'm personally reviewing it with our Chief Operating Officer on a regular basis. He's been focused on this. We're confident as we move forward. This will be a state-of-the-art project that will help us improve the citizens' life, but more and equally importantly, build up solutions that we can take to others.
Sorry, just one final follow-up, because I know you're short on time. But when I talk to companies globally engaged in this space, whether services or otherwise, Checkpoint, this, that, what have you, everybody talks about how the quantum of spends and the nature of sticky spends in this space will really gallop at a very fast clip over the course of the next 5 years. What are your thoughts?
Very interesting that you bring it up. Cybersecurity remains one of the hottest topics, if I may, and the highest growth areas that you can look at. Look, more than that, I would step back and say, I mean, and you know, now I don't think we can trademark the work. We're calling it SDX, software-defined everything. I do believe that software-defined everything, embedded systems, these are two areas that will continue to see spends as you move forward. People will cut in other areas and spend in these areas. So as long as you're covering a company that continues to invest in these areas, I can promise you growth will continue to happen.
Okay. Amit, sorry, I've done 9 minutes. I'll just take one more minute. This will be my final question. I heard you say that the guidance factors in organic growth of 9 to 10%, if I'm not wrong. At some point of time in the year, the inorganic comes in. Sorry, so just...
Yeah, so what I'm saying is, organic guidance at this stage is 8 to 10% for the year.
Sorry.
8 to 10% for the year. In addition to that, there should be inorganic kicking in because we have an aspiration to get in to $1.5 billion in FY25.
Yeah, so if it kicks in, so just to get the numbers straight, what does it take the, what would it take the aspirational growth catapult to in terms of a number?
So let's get to the 1.5 billion run rate first, and then we'll tell you internal targets are always higher, but I want to be careful. I would like to commit what I can deliver, and then I would like to deliver what I have committed.